With the material of this asynchronous lecture, I delve a little deeper into the topic of business associations, business entities. And some of what I will speak of is a bit repetitive, probably from the first session on business associations or business entities or business organizations, however you want to call it. But I do want to particularly focus a little bit more on the distinctions within the entity that we refer to as the corporate entity. From our first session, you may recall that I spoke about the fact that when you are engaged in business, when you are engaged in some form of commercial activity, when you're involved in a commercial transaction, when there is a payment, when you're engaged in some form of contract or acting in a business capacity, if you are not doing so as an agent, as a representative of another, if you're not doing so in your capacity as an employee working for an entity, then we will classify your business transaction. We will classify you in engaging in that business transaction as a sole proprietor, a corporation, or as a partner if you are engaged in that transaction with others and you have not formalized the relationship by filing articles of incorporation or the articles of organization to establish a limited liability company. And when we look at the three main classifications of businesses, what is certainly important is to be able to always be aware, always know within which classification your commercial activity would fit. By default, when we do not incorporate the business and when we are acting alone and when we are not acting as an employee or as an agent for another or others, by default, we're deemed to be a sole proprietor. And we have all engaged in business as a sole proprietor. And the features of the sole proprietorship is that we do not have to formalize the business relationship. We don't have to file articles of incorporation. There is no cost. There is no barrier to entry when we engage in commercial transactions as a sole proprietor. The deficiency, the downside of the sole proprietorship is that we face unlimited personal liability for the wrongs that can happen as a result of that commercial activity. If we are alleged to breach a contract, if we are alleged to have committed a tort, if we are alleged to have violated a statute, the allegation is against us personally, and that subjects our assets to collection if there is ultimately a judgment. And we're responsible for defending ourselves against those allegations. And so the more that someone has, or the more risky the business endeavor that they are going to engage in, the greater the likelihood that they will incorporate. They will separate themselves personally by creating a legal entity, a corporate entity that is engaging in the commercial activity, thereby insulating themselves or attempting to insulate themselves personally from the actions of the business. Now, for our purposes, I kind of lump together all different types of corporate entities. We do have some distinctions within the law of corporate entities. But for our purposes, we're viewing the corporate entity as being distinct from those who create the corporate entity, those who work for the corporate entity, those who own shares in the corporate entity. And I think it is important, certainly, to point out, and I'll talk about this again when we look at employment law, that Simply because you are working on behalf of a corporate entity doesn't mean that you won't face personal liability for your conduct, for your behavior. By way of example, if you are a vice president working for Acme Corporation, and in your capacity as the vice president working for Acme Corporation, you fire another employee, some subordinate of yours at Acme. If that subordinate of yours files a lawsuit against Acme for wrongful termination, you very well might be sued. You very well might be dragged into that litigation personally. Now, Acme will defend you. Acme will indemnify you for the actions that you have taken, so long as you have done so in your capacity as an employee and done so at the direction of Acme. But by the way, when we talk about that, you're also going to always want to remember that if you get sued personally, even as an employee working on behalf of another, always demand your own counsel. Always want your own legal representative, your own lawyer, someone who is charged with looking after what is in your best interest. We'll talk about that as we move next into employment law and employment discrimination. But I do want to point out that simply because you have incorporated doesn't mean that personally you're going to not get sued. But the purpose of incorporating is to certainly limit our exposure, limit our potential liability, limit our risk of losing our own personal assets because of the liability associated with the business. The key, and I've spoken to you about this previously, but the key is when you incorporate, when you create a corporate entity, you have to make sure that those who are doing business with you know that they are doing business with the corporate entity and not you personally. And so it is extremely important that when you are entering into a commercial activity, on both sides of that commercial activity, know with certainty who is bearing responsibility in that transaction. Know that you are incorporated if you are seeking to protect yourself, to create a buffer between your actions and the potential liability that the entity may face. But be very cognizant, be very aware of the business entity that you are also about to transact business with. Oftentimes we create sub businesses owned by another business. We will try to silo potential liability. Acme Incorporated will create Acme Limited Liability Company for purposes of a event, hoping that whatever liability exists with Acme Limited Liability Company will not ultimately be sufficient that it will affect the resources and assets of Acme Incorporated. And so we attempt to place the potential liability actions within silos that will not ultimately affect other business operations. Recognizing this, knowing this, it is very important that when we sign a contract, that we know exactly who it is that we're entering into that contract with. We do find that within many industries that the norm has been for the brand name, the entity whom we all know the name of, to actually subcontract out much labor to other entities so as to limit potential exposure for imputed liability claims, workers' compensation claims, and also to push off on other entities the responsibility for of providing health insurance by way of example. I'm going to go to the lecture slide so that I can talk a little bit more about the issues within the corporate entity, because that's really the main thrust of this discussion, to make sure that you understand how within the law of corporations that we subclassify the concept of the corporation, but not wanting to lose the forest for the trees, recognize that the purpose primarily of incorporating, creating this legal entity that is separate and distinct from those who have created the corporation, created the entity, work for the entity or own the entity, that the primary objective is to minimize the potential liability or loss of those individuals who have created that corporate entity. It certainly makes selling securities, selling shares of ownership of an entity a heck of a lot easier. You're going to be less inclined to buy interests in a business if you're going to take on personal liability. And while investment can be risky in and of itself, look at the crypto market, if you could even call that investment. But when people speculate and put at risk money to buy an interest, an ownership shares of stock in an entity, they will do so knowing that the risk that they face is just the loss of their investment, but not personal liability for the acts of that business. And that's at the heart of why we incorporate. And what I wish to do is just talk a little bit about the different terms that you hear within the law of corporations. And I have shared with you before, but I strongly believe that part of the difficulty, part of the confusion, part of the frustration, part of the fear that people have of law is the terminology. And the terms can make what are truly intended to be concepts that are logical. The terminology can make the concept seem more difficult, and I think that is unfortunate. Within the concept of corporations, we have the classifications of a profit objective or a nonprofit corporation. Within the profit corporations, we have the subcategorizations of S corporation and C corporation. The S corporation is the more closely privately held entity where we limit the number of shares of ownership to 100 individuals, including a married couple and or their trusts. Whereas the C corporation, there is no limitation on the number of ownership shares, and those typically always will include, when you have a publicly held corporation, it will almost always be, in fact, it would almost be impossible for it not to be classified as a C corporation. And then the concept of the limited liability company, and while technically a limited liability company is not a corporation, it is actually an entity under the tax code that is treated much more like a partnership for purposes of reporting of income. Our objective is not the tax objective. Our objective is to familiarize ourselves with the concept of liability and limiting liability. And so the limited liability company, for our purposes, can really be viewed as almost identical or akin to the subchapter S corporation. One distinction, just while mentioning the limited liability company, is those of you that are involved in a particular business transaction alone, not even looking to file a separate tax return for the business entity. The limited liability company works very, very nicely because in many, many circumstances, any income that is generated by the limited liability company can just simply be reflected on an individual's own 1040 tax return. We've talked about the sole proprietorship. We've talked about the default that is presumed when a corporate entity is not established. My objective with you today is to just talk more about the different classifications within the corporate entity. And also to talk briefly about the establishment of the corporate entity. Corporations are entities, legal entities, every bit as much as you and I are. Obviously, the distinction with the corporate entity is that it doesn't have a physical presence. And so with the corporation, you have to identify who it is that makes the decisions for the corporation, who it is that is the resident agent for the corporation. And one of the truly important things when establishing a corporate entity, particularly if there are more than one individuals that are going to hold ownership in the corporation, is to put in place a plan for the operation of the corporation, including a plan for the ending of the corporation. What happens if one of the owners of the corporations, one of the shareholders of the corporation dies? Or what happens if one of the shareholders of the corporation just wants out? People, when they sit down and talk about establishing a corporation, want to put in place a prospectus for the corporation succeeding and making them a lot of money. And I've always had to caution people that most corporations fail. Most corporations don't actually make money over the course of the first few years. And even those that do succeed, there needs to be an operating agreement, a plan in place for the ending of the corporation. What happens by way of valuing the shares of each owner, and what is in place for purchasing back from an owner their shares of the corporation in the event of their death, or in the event that they just simply no longer want to be a member of a corporation. We'll talk a little bit about this when we look at employment law, and we talk about some of the litigation that can exist, particularly when individuals come together as shareholders in a closely held corporation. And there is the concept of what we refer to under the laws of oppression of a group of shareholders forcing out another shareholder of a corporation. We'll talk a little bit about that as we look at employment discrimination cases and the different types of claims that are brought by employees against employers, including against corporations that they may have been involved in the establishment of. The backdrop certainly to all corporation law is the ability to create a veil of protection for the owners, operators, employees, directors of the corporation, such that the liabilities of the corporation are not the liabilities of those individuals. You will hear constantly the claim of, well, we'll pierce the corporate veil. We'll seek to hold the individuals liable for the debts of the corporation. Very difficult to do. I think Bernard Madoff is an example of when that has been possible, but it is really the exception to the law that proves the strength of the corporate veil, because it is difficult to actually pierce the corporate veil and hold individuals responsible for the debts of the corporation. You can always seek to hold individuals responsible for their own unlawful actions, but holding them liable for the unlawful actions of the corporate entity is very, very difficult to do. As I said, the classification of the corporation in how it is taxed, you will hear the terminology, is this a C corporation? Is this an S corporation? Every corporation begins or starts as a corporation that is classified under subchapter C of the Internal Revenue Code. The election to S status can be made, and it is often made, particularly if you have a closely held, privately held entity. The primary distinction is that with the C corporation, the corporation is taxed on its income, and then when that income is passed through to shareholders, that income is taxed again at the shareholders' income tax rate in the form of dividends. Whereas with the S corporation, when the owners of the corporation make an election to file under subchapter S of the Internal Revenue Code, the corporation itself does not pay tax on its income, but instead that which is passed through as income to the owners of the S corporation, the shareholders of the S corporation, is taxed. It's a pass-through of income to those shareholders, and it eliminates what we refer to as the double taxation of corporate profits. Of course, S election is only available to corporations that have limited numbers of owners, and there is also limitations on the type of stock that is able to be issued for S corporations. I know the written material and some of the lecture slides talk about the different classifications of stock. That is not something that I test on for our exam, but it's a little beyond what I think is important for you to know for purposes of this class. One of the other ways that we will classify corporations is based on the purpose, based on the objective of the corporation. We have, by way of example, when a licensed professional incorporates his or her or their business, we place upon that corporation the classification or designation of professional corporation. When you visit your dentist, you may see the name of the dentist and then the designation PC after the name of the dentist. That's because the dentist has incorporated his or her or their practice. And this isn't a noteworthy distinction within the law of corporations, because this presents where there is an exception to the concept of the corporate veil. We do not let professionals, those who hold licenses, engineers, physicians, dentists, lawyers, accountants, architects, we do not let the professional person escape personal liability for his or her their bad behavior, their unlawful behavior, because they have incorporated. Now, the professional corporation acts like any other corporation for non-malpractice claims. But for purposes of malpractice claims, professional negligence claims, the individual, the licensed individual, the licensed professional is always personally liable for his or her or their own acts of professional negligence. That's why most licensed professionals hold malpractice insurance to make sure that they're provided a buffer against collection of their own personal assets. The concept of the publicly traded corporation has existed for centuries. It is certainly an attempt for bringing in private investment money into corporations. Obviously, a big deal is made when a corporation goes public and has an IPO, an initial public offering. You may be old enough to remember, when Facebook went public, and various different tech stocks. There's usually a large announcement, and we watch the value of stock with great interest for a few days or weeks, and see if it goes up from its initial offering or down from its initial offering. And I suspect that probably some of you are interested in investment through a brokerage firm, and making investment in publicly traded corporations. In fact, most people that have retirement accounts, those 401ks, those IRAs, those 403bs are vested to some extent in speculative investment, and that is your investment in the stock markets. The closely held corporation or privately held corporation is the corporation who has a limited number of shareholders, and the stock is not publicly traded on a national stock exchange. I show the logo of Meijer because here locally, to me, that is always one of the classic examples of a very large, successful, profitable business that is not available for you and I to purchase shares of stock, as it is a closely held corporation. Whereas if we wish to go and become a part owner of Kroger, we have certainly the ability to do that when the stock market is open. I also want to bring to your attention how easy it is, frankly, to establish a corporate entity. States try very hard to attract new businesses and startup businesses. Sometimes the most challenging aspect of the establishment of a business is to come up with a name that isn't already personally used by another entity. And so we have various different portals that make it very, very easy to check about the availability of a name, and also to check all of the corporate filings relative to a particular entity. And so I point you to this website. Hopefully in the lecture slides, you'll even have a link that you can click on to and put in a name or two and see what comes up. And what you'll also be able to see is all of the corporate filings for that entity. When a corporation is to be established, there are steps that have to take place. The first is the filing of articles of incorporation with a state. This is essentially your request of the state to be certified as a corporate entity rather than as individuals who are engaging in business. The time frame for a state responding is usually incredibly quick. In Michigan, you could file articles of incorporation for $50, including another $10 for servicing fees. If you need it expedited, you can pay more. You can file your request for articles of incorporation online. You can do it in person. And what the state does is they'll look at the name that is being requested. They'll look at the names of the name of the individual who is seeking corporate status. And the state, frankly, works very well with people as to any deficiencies that may exist. I file articles of incorporation with great frequency on behalf of clients, and don't always do it perfectly. And we'll get an email with some deficiency in the form that I have filed. And again, states usually work quite well with individuals wishing to make it easier for them to actually establish the corporation. Now, once that has happened, it still is important for the corporation to establish, or the members, the owners of the corporation, the shareholders, to come up with the game plan, to the rules of the corporation, the law that applies, if you will, to that entity. Who has the authority to act on behalf of the business? As I suggested to you, what is the plan for purposes of valuing the ownership interest of the business? Is there going to be insurance that is purchased to provide for or protect the value of the business if a key person were to die or become ill? These are all part of the kind of the roadmap for the future. I've always felt that the most important person that you can meet with in the establishment of a business is a good accountant, a good CPA, a good person who is able to navigate through the necessary tax filings to get you off to a good start if you're going to incorporate. I don't actually think that a lawyer is really necessary to file the documents to establish the corporate entity, and people typically do that on their own. But I do think it is always important for people to seek counsel with respect to the operating agreement, the bylaws, the rules of the internal mechanism and operation of the corporate entity. We will continue to talk about these concepts as we move into employment law and as we looked at other business liability issues. But for purposes of, I think, giving you a sense, I hope, of understanding the classifications within which we assign or to which we assign business, I want you to fall into the routine of looking at all business transactions and kind of going through that progression of thought. Is this a sole proprietorship? Is this a corporation? Or is this a partnership? And take steps to note when you are spending money. Who is it that is actually the entity with which you are spending money? They cannot hide that fact from you. And it will allow you to have a better understanding, a better appreciation of how we go about engaging in the establishment of business entities, even through sometimes the question and issue of liability concerns when those entities fail and we have bankruptcy. Read an article recently about the businesses that particularly in the hospitality industry, the businesses, the restaurants that are on the brink of failure, and so the concept of bankruptcy and liability claims is something that we're probably going to see more of in the not too distant future. Please check in and let me know how I can assist you. I know we're getting again down to the end. That creates anxiety in and of itself for people. Let me limit that anxiety for you in any way that I can. And as I've said to you before, and I will try to remind you through now and the end, don't let a day go by where you're not reaching or looking out to try to help somebody that doesn't have it as good as you. And if you think, and it may take a moment even, but if you think about it, you know who those people are, and just let them know that you're thinking about them. It's amazing the smile that is put on a person's face just even by receiving a text from somebody out of the blue. And just letting them know you think about them is something that makes a difference.